Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go.
Hi everyone, today is Wednesday, August the 20th. My name is Anne-Marie Band and this is the Moneyball Morning Report for the Benzinga Pro platform. What are we staring down here? We start with the daily, taking a look at this pocket of congestion. The traders really want to defend this area. It's pretty important. We can see if we slip to our intraday formations, we can see that there is a spike in activity here with our little volume by time of day telling us there's a lot of activity that really wants us to hold this 4-hour formation, right? And so what we notice now is our 4-hour candlestick yesterday, which is pretty big, right? A lot of selling into frontline support. That's the 63 simple moving average. We still have negative momentum, but we've got ourselves a little bit of buying trough right here. What do the traders want to do? They want to get up over value area high, right? That's pretty important. The next candlestick of import is really the one we tested yesterday. Down here for the 4-hour formation at 10 o'clock on August 7th. And so the base of that area is, what is that, 6,400-ish, right? 6,410. The point of control is 6,407, 6,407. And then the volume weighted average price is down here at 63.95 or so. We should remember that number. We can see support, 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 support before it turns into resistance. Are we still making higher lows and higher highs? Yes, we are, but we are in an obvious retracement event. You know, I don't trade with trend lines because there are infinitely many of them you can use, so it makes things a bit arbitrary, but it does tell our eyes, hey, listen, we break down from here, we've got some problems, right? Right now they know that, traders that are trying to move price, they know that and they expect the rise up into the value area high, which is 6,435 or so. It might be 6,440. And that's what we're staring down. So in our 30-minute formation, right, what we do want to see is the last 30-minute candle of the day. I saw that one of the members in the hive took a long in the NQ just shortly, but this is where we're trapped, right? And if we use a 1-to-1, and I'll draw Fibonacci and then erase it, but if we choose a 1-to-1, okay, we can see that we dipped down into the price action event that literally gave us twice the size of this move, right? And we see that with big volume candles very often. They end up multiplying themselves in terms of price extensions, okay? So what's the goal today? That we get back up over the top of this trading volume that is so big, and then potentially start to recover some of this low volume pocket that we're actually seeing and run up into value area high, which is 64. I'd say it's about 60. I'd say it's 64.40 to 64.50, truly speaking. Machine learning has said, hey, listen, they are trying to hold this as a bottom. So the flip side of that is if they lose it, we're off to that area that is around 63.95, right? Here's the big fat round number everyone will be looking at is 6,400. But chances are 63.95 is probably more likely. So we'll keep our eyes on that one. Trend down on the 30-minute, down to flat in the tighter time frame, momentum up, so they are looking for the resistance pockets. I suspect that is right around here at 64.40-ish, right? Could be as low as 64.28, 64.27, right? We just have to be, 37, 6,437. All right, let's take a look at the NQ. As a reminder, folks, I am out of the office today. Let's take a look at the daily charts on the NQ. Notice we've broken down past this support floor. Super important. I think tech looks really weak, and I have one portfolio that is incredibly tech heavy, and it was a sea of red yesterday. It was atrocious. Okay, so this breakdown, actually it's probably this breakdown up here at 23,750. Now the line in the sand is probably somewhere around here, right? This big pocket, we're trying to hold it. Price action trying to bounce there, but the movement is very tepid. Nobody's super excited. UK inflation came in hot. That's got everybody probably pretty worried. And it is what it is. Okay. What is the big volume candle here? It's this one. We just bounced off of it. Let's see if the 4-hour reading will give us some news. Yeah, we've got it. There is a big volume pocket here. And then, yeah, if we put it on a daily, we're going to see that this area of heavy congestion is incredibly key. If we can't break it, we will head to the volume point of control. This bullish candlestick is the one that we're discussing, and we just are trying to get up and over it. If we hold it, we could have a rewarding by the dip day, right? If not, it's going to fall into the volume weighted average price, and that's around 23,006. All right, let's go back to our 30-minute. Take a look at the formation. We've got a lot above us. Notice, last 30-minute candlestick of the day was not impressive in terms of volume. We do circle it, we do put a box around it because it ends up being fairly important for one reason or another. But the traders do know where it is and try to get themselves up and over that edge. Here is the 30-minute candle of the high candle of yesterday, and we just left traders in the dust there. Collapses, and it never comes back. We're down here. Support floor, 23,300. This is carving itself out as resistance, but we have upward momentum, and we are trying to hold above this price. So, dips likely to be buy zones in this kind of formation. Right? And we shall see. Looks a little tough. I would say instead of the trend line, if you're looking to buy in this formation, maybe this low area here at 23,000. Is that a 3 or a 4? 23,388 or so. That might give you the real floor. It's old resistance, new support. You know, that's how my favorite lines are drawn, are never just on support floors. It's support and resistance that's been tested prior. And that's why I choose to make the line that I make it. Okay. Lower edges, 23,366 in this tight time frame. 30 minutes of the prior day still holding as resistance. Volume point, high volume node right up here, somewhere around 23,480. And then peak, 23,476. I don't know if we'll get up here. It could be, but this feels to me very much like a pretty savage downslope in the space if it doesn't hold this area with the floor at 23,366. Below, easily we could test 23,000. A lot of selling. The entire day's formation had outsized candlesticks, right? The only one that didn't was this one right here. Everybody else either trying to buy it with all their might or trying to sell it with all their might. All right. Let's take a look at the YM. Let's go to the daily. This one's still caught in a thread. Upper bounds still 45,312. Lower bounds, if we go resistance to support, looks like 44,770. Point of control, 44,580. Volume weighted average price, 44,280, and then value area low, 44,000 even-ish. Trend and momentum pretty divergent, right? Here is high, here's another high. This corresponds to the price high, this corresponds to the secondary price high. That is divergent momentum. And it's continuing. Old high compared to new high, divergence. And so this tells us that any big bounces we see are very likely to sell off. If we take a look at the 4-hour formation, we're really caught in just two boxes. This one here on August the 13th looks like we hit about the 50% range. Let's have a peek. See the Fibonacci on that one. Yep, just about that 50% range. Let me move it up here a little bit because, yeah, that's the one. 50% range right here. And they bounce, right? Not without piercing, but they do bounce. And so chances are they're going to try to get themselves up here. Fly in the ointment is negative divergence. Clearly, we can see the negative divergence here. Steep slope. Momentum and trend are not aligned, so candlesticks are going to retrace each other. And the 63 simple moving average is all the way down here at 44,600. So my thought is sideways patch, noisy bits, deep dips going to be buys. You just got to hang on as you move up. And big spikes, definitely going to be sells. But the deep dips could be deep, folks. So try not to, if you're getting in, you need to realize that there's potentially more on the horizon for the fade. And what that will do is give us lower lows continually. And so if you try to buy the dip and it keeps going, just get out and wait for the next one if you're thinking about going along. Okay? We've got a lot of candles here. Yesterday's selling candle was pretty big, and so that's that one we need to cover. We're clearly inside of it right now, so there's hope, but still looks super messy to me. Last 30 minutes of the trading day, they did pack in a fair bit of volume relative to the price, but as you can see, we're stuck in the bits. Looks like resistance to me, right? But could I be wrong? Absolutely. Momentum is up, and the trend of the short moving average is up. The trend of the longer moving average is flat. So we could have an extension out into 45,000, maybe, where the volume weighted average price is sitting. And then 45,070, that's the big number we can see from the daily. And then value area high, 45,200 or so. If we fall back into the pocket, right? If this area, let's do Fibonacci on it. If we fall back into this area and we lose the midline, we are going to have ourselves potential downside draft, right? My thought is downside draft is on the horizon. Risk management, super important. And so you just have to see what goes. 30-minute opening candlestick from yesterday. That's also one that we do. I know, I'm moving at the speed of dirt. I know. Notice resistance in the overnight on this opening 30-minute candlestick formation. Nope. No, that's the highest volume candlestick. Yeah, it's the 30-minute candle. Pops in there, loses it, comes all the way back down. Notice the opening 30-minute candlestick, the high remains the high, right? So that's always bearish to me. It falls outside of the statistics that say there's an 85% chance of a double break on both sides. And we only have one break. That's statistical anomaly, probably trending to the downside. Micro Bitcoin. Oh, I am moving at the speed of dirt. I really am. Let's take a look at the daily very quickly. Right. Very big selling candle 2 days ago. And not big as in range of the candle, big as in volume, right? And then before that, the second highest one is one that we just fell through. This one right here. Right? That is the candle we just fell through. And so it is definitely one time framing down. The fly in the ointment here is that it's moving, it's right at the 63 simple moving average. It's, you know, old resistance that becomes support. We could be waiting on that candle to do that, but the easiest example of that is right here at 112,000. Now, 113,000 was my target at the beginning of the week, if you recall. And it is now under there. And so what we really have to think about is what's going on? And I think it is Bitcoin liquidation because people are gathering their cash out of the market for some reason. Now, obviously, big money players are always in the market. They just move it around. But I'm seeing a fair element of liquidation. So what are we staring down? This 4-hour candlestick, we broke it. Did the measured move. The next measured move target that is near support and resistance is, let me clone this. It's right here at the base of this. That's the one that gets us as close to the measured move. And that is clearly a battleground between resistance and support. And that number is 109. Now, Peter Brandt says that he thinks it ought to go to 78,000, which I would not mind. I just have to say, that would be a great place to pick this up, but you can see it breaking out of the coil. It did it this time and then came up. So we're looking for the same sort of thing. Can it test the region, get back in the box, and then recover? So what's the trade, Anne-Marie? Well, right now the trade is bounces or sell zones. 115,000 selling point, outsized buying pressure, also puts us in the range here. I like 115,600 as a selling point. If, per happenstance, it gets to, you need a stop that's about 900 ticks away. And so that could get a little sticky, but if you just use 1 micro, it should be fine. If it breaks and then pulls back and holds the value area low at 115,100, that's even better for the move to the north. And if it fails it, we got another ride down. All right, there's literally no volume in this contract down at these levels here. It's very, very, very thin. Okay, let's take a look at oil. As your friendly busy bee over here is moving at the speed of molasses. Let's take a look at the daily. 62.46. Are we in a contract roll? Let me see. Yes, we are, friends. We are now in the V. CLV 25. Okay. So we have a little bit of backwardation going on in general. That means price in the forward contracts is less than price in the near-term contracts. Yesterday, we hit the 61 area, but you can see from a daily perspective, we're still inside of a big fat range. Traders could dance around this zone, right? Yesterday's volume was big-ish relative to motion, right? Some of the highest selling volume we've seen. It could be a volume exhaustion candle from yesterday. So let's look at the 4-hour and see if they've brought buyers in since that yes, absolutely. They're holding this range. Low edge 6160 and the high edge right at around 62ish, 62.20. All right, so what's trend? Down. What's momentum? Up to flat in negative territory. What does that mean? Bounces or sell zones. Bounces or sell zones. Now, is it sticky? You betcha. Why? Because price action is turning around. Potentially, it's turning around. Look at how much outsized buying pressure or selling pressure. I have no idea which one, but a lot of price pressure and a lot of arguing in this region. What does that tell you? When it breaks, it's going to be big. Whatever the break is. The break is going to be big. Look at all of this motion. Very outsized from normal. Very outsized from normal. Yes, it's the new contract roll, but still, we're looking at the floor of 6150, the ceiling of 60. What is that? Yes, it's not good to blow a raspberry in the mic. What are you doing? 62, maybe 63, somewhere around there. Looks like old resistance, old support, old resistance. We'll see what happens there at 63.90. And then if it happens to blow out of the top, we've got 64.10. Right now, they're just doing everything they can to hang on to the base of this price. If it fails, that's going to be troublesome for U.S. producers. More on that later. We won't be chit-chatting that sort of thing today, but we can at some juncture. Let's take a look at gold. All right, gold for our candlestick formation. Let's look at the daily. See this? Sideways, people. Sideways. this range, buyers have been coming in right around the 3,340-ish area, 3,350, trying to get up. What is this? Flat, bigger moving average, momentum down, selling pressure not expanding. So they are going to try to hold the bottom of this range. No doubt about it. In my mind, they're definitely going to try and hold it. Line in the sand above, we know that's 3,500 or so. And then, of course, the line in the sand below, I think, is 3,300. So we've got a $200 range that price action is essentially sitting in, where our dips make really great buys. Looks like we got some volume exhaustion here. So traders are going to try and push it to the top of the high volume node. That's 3,450. Let's take a look at the 4 hour now. Very noisy, right? We got 3 overlapping 4 hour candlesticks, but our daily chart examination did show that negative trending volume event was saying, hey, sellers are getting tired. And so we're going to bounce into higher sell zones. What number is that? 3,400? That's what I would suspect. All the way to 3,410, right? That's what I think is going on here. Could be we get shy of 3,410. It could be 3,408. But we do see commodities lifting this morning, holding the low 30-minute candlestick formation, the opening range candle. Let's go to the 30-minute here and see how gold doesn't really obey the 30-minute forms very much. Here's a 10:30 spike yesterday that might be important to look at. We are over it. That's the key thing. We're over that spike. And so the question is, if we've got expansion in the works for gold, we can draw ourselves a simple Fibonacci here. That gives us our 3,400, which puts the price extensions and our statistical calculations from the 4 hour formation suggest that if this thing moves upside, that's the shot it's got, with a first pass into 3,389. Lastly, let's take a look at SPY. Okay. So first, let's take a look at the day. Right? This is the big volume candle I'm measuring. We're caught inside of that candlestick formation from the daily perspective. Oh no, we're bouncing off of the edge. Oh, that's the 4 hour. Let's use the day. If we use the day, we're inside of the candle. The 50% line is 635. I wouldn't be surprised if we tested that, but look at how strong the trend is here. If this breaks, we could have a day that moves down and really tests some low levels. Some people might argue that we have the coil break right here, but one day does not a trend make, as they say. And so let's go to the 4 hour formation. Here, yes, grinding again, drilling, gotta love it. The high volume candlestick here is the one that we've drawn the box around. We just tried to test the top of it, right? So they are bouncing. What is the trade? It's caught between 2 moving averages. One is downside and one is up to flat. My suspicion is that bounces are sell zones. So any move up into 644, selling point, 641, selling point. I would trade in the direction of trend, right? I would trade in the direction of trend. Last 30-minute candlestick of the day yesterday. We're sitting inside of it. I'm going to lose my mind with these workmen. Okay. It's a thing, right? You pay for craftsmanship and they take their time. And that's okay. I'm going insane from the noise. All right. So as we take a look at this, we're caught inside. Look for a confirmation that it can hold 640. If it does, it could rise very easily to 641. It's already broken through the ledge, so we got to go to the left here to find the support floors. And that looks like this candlestick right here. Potentially target zones. Right? If it loses that edge, and there's a little bit of a gap, so it could go all the way to this area at 636. All right? Hey, listen, I know I was a little bit clunky this morning. My brain not working for me. But I won't see you on the streams today. I am out of the office, and I'll see you all on Thursday. Looking forward to our Hive meeting that starts at 12 noon tomorrow. All right, take care, everyone.